In the vast landscape of investing, many risks lurk: market crashes, frauds, bankruptcies. But there's one threat that towers above all the others: a global financial crisis. This is the real danger that could disrupt the entire economic system, rendering all other risks trivial in comparison. A striking lesson from watching financial crime documentaries like American Greed is the familiar pattern of scams. These fraudulent schemes often come from small, obscure firms that promise extraordinary returns, but fail to provide any real substance. The typical story is the same. Word spreads about a boutique investment firm making impossible claims, 20% returns, and suddenly the firm grows exponentially. The culprits capitalize on the desire for quick wealth, fooling investors with hollow promises and no actual value. But while these scams can wipe out individual investors, they don't threaten the entire financial structure. They're dangerous, but they're not catastrophic. This leads us to the global financial crisis principle. The only true existential threat to your investments comes from a disaster on a global scale. We're not talking about the collapse of a small company or a local Ponzi scheme. Those are personal tragedies, but they don't rock the foundation of the financial world. But when giant financial institutions, those too-big-to-fail companies, fall, it creates a systemic failure that could break the entire banking structure. To avoid this risk, the global financial crisis principle advises focusing your investments on large, well-established companies that are subjected to rigorous oversight and transparency. Bigger companies have the infrastructure to absorb shocks. The larger the institution, the less likely it is to vanish without warning, as their failure would have monumental repercussions. When a firm like Vanguard crashes, it's not just the investors in that firm who suffer. Such a collapse would threaten the entire global economy. On the flip side, investing in small, lesser-known firms, especially those in untested industries, like peer-to-peer lending, can be a dangerous gamble. These companies may not make headlines, but when they fail, it could devastate you financially. Their collapse might only get a few seconds of media attention, but for the investors, it can lead to years of recovery or even a lifetime of regret. The global financial crisis principle is about distinguishing between risks that are real and those that are only momentary. To safeguard your wealth, focus on proven, reliable investments. The small, unproven ventures might seem appealing, but they carry much higher risks. Your financial security should never depend on something untested or fragile. Stick with the big, stable players, because when the global financial system falters, it's those towering institutions that will withstand the storm.